Hello traders, in this video we're going to be talking about the top-down analysis, and because so many people I know this is their first time maybe to hear about this, or maybe they just want to advance this is your first time as a trader. I'll actually be narrowing this down from the scratch so that you can understand everything from the chart all the way to the fundamental analysis, where you actually have to start everything you actually need to know about the top-down analysis. You're going to be getting in this video, and I promise after this video you don't have to watch any other video on the top-down analysis. Let's just jump to this. So number one, when you talk about the top-down analysis, you can actually start with fundamental analysis, because the first thing that you have to do if you want to have a good strategy that you want to implement the market so that we can improve this profitability, then we're actually going to start with combining the FA and TA, that is fundamental analysis and technical analysis. Now when we talk about the fundamental analysis, we are talking about the news, we are talking about the news that are actually being released and the policies that are actually implemented by the central bank of that nation. For example, when we talk about the US and US dollar, we think about the Federal Reserve, what are the decisions that are actually being made there. So we can start with looking at the information that has high impact towards the market. In this case, we can be looking at the CPI, what is the consequences of the CPI, what is the effect of the CPI to the market. We have these high impact policies that normally and news that normally come up and makes the market to move in a very big way. Those are high impact news. For example, CPI, interest rate, we have NP, that is non-farm payrolls, and we also have the GDP and also the PMI. So those are the basic things that you actually have to start. So before even you just start anywhere in analyzing the market, those are the first things that you actually have to check on the market, because they play a very big role into the market. Because you can go and analyze the market in the chart so well, but when you ignore those fundamental analysis, they can actually cost you so badly. So my advice is, if you even don't know about the details, the micro more about microeconomics, just go and look for those high impact news that I've actually mentioned, and then you can actually start from there, and things are going to be very easy. So those are kind of things that where we actually have to start, and you can get those all information from the calendar, that is FX Forex Factory calendar. You can just get there and see. Also the impact is actually written there, the impact that is expected, how it's going to be impacting that currency. It cannot only be the US dollar, but we have GBP, JPY, all the currencies that are there. They can actually be influenced by the fundamental analysis, but you can start from the big ones that actually have high impact. That being number one, let's just jump to the technical analysis. On the technical analysis, I'm going to be giving you little information, very good details information here, actually the big one. And if this is your first time as Hyacinth to analyzing the forex market, I'm going to be making this very simple for you. Now I want to start with what is time frame and how it is, what is the relationship with the candlesticks before we start there, so that if this is your first time maybe to know about this, about the candlesticks and all these things, is going to be very important. Now let me just talk about this. So if you see on the market, you can see there are things that are formed in the market, and these are the ones that are candlesticks. So if maybe this is your first time or you have been analyzing the market, you know already what is this, just bear us some patience so that we can explain to those you don't know, but you can still watch this until the end. Now if you look at these candles, you can see there's 1 2 3 4 5 6, all these candles that are actually aligned right here. So the time frame that I've selected here is actually 60 minutes, which is actually equivalent to 1 hour. So this is actually the 1 hour. So we have 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. All these candles that you normally see here, they present 1 hour of movement. And let me just explain to you what you see about red and greens. So let me just start from this so that you can really understand. For example, I just want to start in a very simple way from let me just analyze right from this candle that you see here. So you see there are two candles that was actually right here. So we have this candle being green. It means that the opening and the closing are actually different, because the opening is down here and it closed here, which means if if the candle actually opens at a lower price and closes at the higher prices, then that candle moved up, and that's why it is green. For example, you can see that. So this was the opening and this was the closing. Now after that candle closed here, another one opened right the horizontal around there. This was the opening and this was the closing point. So that is what actually you have to know. And the price means this price here is low and this is high, and that's why you can see these are opening, closing, opening, closing. But when it comes to this, after this price closed around this area, you can see another one opened around this area, but it went all the way down to this position, meaning that their opening is high but the closing is low, making this to actually move down. And that's why we have now this market now being, we have this candle being red, and that actually took 1 hour. So the next hour, when that 60 minute actually finished, then this candle closed at that. But what is this that you can see here? It means the market and moved to this, but it just reversed and closed around this position here. If it actually had gone and closed above here, we could have been having all this being the shadow, and the candle just closes above there and it becomes green, but it's closed around there after 60 minutes is finished. And then another one opened here, closed around this area, another one opened. You know, the closing of a candlesticks is the opening of another, and that's why you can see we are forming between brands and grains and all that. And that's how the market moves in a pattern. That was actually just for us now to brief of where we are actually going. Now you can see there are still candlesticks that are continuing to open on this trend, which is actually very amazing. And you can see now we have these candles that you can actually see here, so which means that it took 1 hour for this candle to actually move around this area. So if you combine between 1 2 3 4 this candle 1 2 3 4, this 4 is actually represent 4 hours, which means if you just want to combine this to see as one candle, you can definitely go to what we call the 4-hour time frame. If you go to the 4-hour time frame, this candle will actually be one. So this candle that you actually see around this area, you can see it is actually this candle that is actually right here, that is representing 4 hours. So after 4 hours this will be closed, which means after 4 hours there are a lot of things that actually happened, and that's why they are split into just 4. So it's just the same thing, but because of that, because now you have combined the 4 candles to be one candle, that means now the chart will actually have to change. The chart definitely has to change, but just know that it's actually the same market. So when we talk about different time frame, we are not talking about different things, we are just talking about the same thing. It's like how you zoom to see things inside, how you zoom out to see generally things, how they just are from the market. And that was actually makes things to be interesting right here. You remember you can even select even to 1 minute time frame, and this will be closing so fast, because after 1 minute you can see this has closed. There's another one that is actually opening here. After this opens, then another one will open like that, but there are so many, 60 of them will make to 1 hour. So what you expect from 1 minute time frame is a lot of noise, because a lot of candles are just opening and not even so many people are paying attention to that. With that brief introduction, let's just go to the time frame of what we call now the time frame element. So when you go to the top down analysis, you can see the one is just from the top to down, which means you can start by analyzing the market from the top all the way to down. And let's just start from this. So in general, just you can go to the weekly time frame, because I think if you go to the weekly time frame, you can see everything that you actually want to see. Okay, you can remember, you can do this to all the pairs, you can do this to all currencies. So this is something that is actually very interesting. Remember, this is I'm just analyzing the BTC Ether. You can go to GBP Euro, you can go to Euro USD, you can go to the gold, different things. Okay, I was just analyzing this because today is on Saturday. I just wanted to analyze this so that you can see well. So you can see now the one thing that actually you have to do on the weekly time frame, because you can't trend on the weekly time frame, because the more you see, let me show you something. If you go to enter using the weekly time frame, you can actually yes, enter in a good position, but remember, you can actually lose a lot of money or make a lot of money, because the small move that you see, every candle that you actually see here, it took 1 week to form and close. and that's what makes things interesting. So which means between that week the market can move in different directions, of which if you don't have good amount of money, your account can either be blown up. But you can generally use this if you are owning money. If you just buying crypto to own, still you can use weekly time frame and daily time frame to enter. Let's just talk about this. So when we look at that, you can see, for example, this candle that was actually formed here, it means this market was going all the way down like that. But you can see the price moved from 63 all the way to 58, and that's looked like a very small one, the one that you can see here, but actually that's a very big move, because remember, this is full week candle. Okay, now what do we see when we normally come to like one weekly time frame? What is our purpose to come to the weekly time frame? So for me, if I want to check the market, if I'm new, generally new to the market, I won't be coming to the weekly time frame to just know few quite things about that pair. Okay, so for example, this is BTC. I just need to know a lot about the Bitcoin, what has been happening, and when I just zoom exactly and I have a chart like that, I can have the full history. I can have the full history of the Bitcoin to know where it has been, how it actually rose from nothing, and now having these prices that we can actually see right here. You can see there was one time the Bitcoin was going at 4,000 and across this area across 3,000, but now we are talking about $60,000, and that is actually amazing. And that's what things that you can actually see, and you can actually even see what caused these prices to move up to here and around this area. When these prices came to that area, this is what happened. We got when these prices came to this position, this is what normally happened, and that and that and that. So it gives you an history. When you go to the weekly time frame, you can even go to the news and search and know what happened, because this, you can see, we have even the date, what happened on the February of 2020, when probably the price of the BTC dropped all the way down. What happened maybe to the Euro USD when the price moved from this to this? Maybe there's something that happened. Maybe there was war. For example, when you go to the gold, you see a lot of things normally happening. Maybe there was war, there's geopolitical event, maybe there was an earthquake that happened and something happened, there was a crash, there's a lot of things that can actually just cause this. So that is information you can just get from that. Let's now go to the weekly time frame, but remember also this can give you clues, because sometimes you can analyze the market and get the pattern, although it is maybe very hard to get that pattern because the market is going to be very small, and maybe you can't observe that clearly. But when you go now after weekly time frame, we can go to the daily time frame. This is where probably you're going to be seeing analysis, market movie, and sometimes you can see some of things that can actually be into the market that you that is actually interesting. For example, let me try and draw a line, a trend line that touches these 3 points that you can see here. Look at that. On the daily time frame now, we can actually come and analyze the market now, because now the candlesticks at least are a little bit more, and there are actually many. And look at that, we have this point, we have this, we have this, and when this market touched here for the 4th time by touching 71, it was actually another opportunity for the sellers to enter into the market and sell from that, of which now when it comes to the daily time frame, now you can see we are starting now to realize that kumbe we can now start now entering from the trend. We can start entering trends right now, and that is what we can see now here on the daily time frame. You can now start looking for the trend. What is the trend of the market? How has this market been moving for a very long time after achieving actually 15,000, around 16,000 that we got last time when Bitcoin actually crashed here? We got now the prices continue to move up like that until where it and achieved around 73 before it went back again to 56, and now we are back again to 71. That is what actually has been happening to the Bitcoin. You can look now, start looking for the breakout trend of the market, analyzing and different things. And one thing I want to mention as well is that when you're actually analyzing on the Bitcoin or this, you can go and add some indicators. If you're using the MACD, this is your time. If you're using RSI, this is the time. If you're using moving average, I think this is the time. For instance, when I just want to hand different moving average like this, let me just hand between 250, and let's see what we are going to be getting from this. So we have different indicators that you can just use from this. So let me just hand between that and the 200 EMA, and let's see what we can get from this market. Now this is the time that we have. Now you can use the indicators. Remember, now the analysis has just started. We are not now learning about the history, because now you can see this support that actually happened here, market crossing this point, and now the market is now moving all the way up, which is actually very interesting. We have another one that actually happened here, so you can actually now start analyzing and seeing how the market has been moving differently, so that you can start now looking for all those entries. Now when you go now to, we can still now, after analyzing this market and seeing how this market has been moving for a very long time, if we can identify things like the support and the resistance, now we can go to the 4-hour time frame. If we go now to the 4-hour time frame, remember now we are looking for the entries. This is where we are now looking for, where are we going to be entering this trend? Do we have a signal that we can just get from this trend now? Because even daily time frame can give you some clues of where this market is ending. And if you are, for example, using the RSI, you are using the MACD, sometimes you may be seeing the market is actually going even to be more correct. All these technical analysis indicate that they are going to be more correct when you are using on the daily time frame compared when you are using to the other time frame like 4-hour time frame. But the 4-hour time frame is actually magical because it is in between the lowest time frame and the highest time frame. So when you are looking for the highest time frame, lowest time frame, I think the 4-hour time frame is in the middle between all of them, and that was makes it more interesting when it comes to that. Let's just proceed with this by looking at the next this one. So if I just want, you can see the same thing that we are talking about on the lowest time frame around here, which is the highest time frame down this area here, which was the daily time frame that actually happened around this area. Now let's just look at something else that is very important as well, which is 4-hour time frame. Now so if you go to the 4-hour time frame, if you have on the 4-hour time frame, sorry, look at that, what has been happening now after looking for the signal. I want you to just see this. After even seeing this, you can see there are smaller details that you now start seeing when it comes to like 4-hour time frame. For example, when this market was moving down like this, you can see how it was forming a very nice trend. When this market was moving like that, let me draw so that you can see this support and resistance. Look at that. I can see, you actually have to be so observant when you are using these things. Look at that trend. That's how this market has been moving for a very long time, and I can expect this market probably to hit around 61 again, 461.4, and then it can probably continue moving all the way down. So those are the things that I expect. And maybe when this market touches again around this area being 56, which has been the big move that actually happened, the lowest that we got here, maybe when we come to this position of 56, maybe that is when we to get another support zone, and this market can proceed to move on the higher basis. So those are the kind of things that you look like. Now all your information, all your technical analysis now is going to be lying between the 4-hour time frame. So 4-hour time frame is maybe going to become your king in that region. The 4-hour time frame is what you're going to be depending more on. But when it comes now, after analyzing and seeing your trends are running so well, you can go now to 1-hour time frame. 1-hour time frame is actually just to confirm that, because you're going to be seeing almost a similar thing, but it's actually going to confirm so more. So one thing is that for example, let's just go even to another scenario of an indicator. For example, if you're using, for example, the RSI, and you see that it is crossed over 70, almost approaching 80 there, and then you are using the 1-hour time frame, and you see now it has not crossed yet the 70 mark. All you can just do is now to wait for 70 1 hour, the RSI to cross also on the 1 time frame to go up, and also on the 4-hour time frame. So it's just a confirmation. What information you got from 4-hour time frame, you wait for them to align with the 1-hour time frame, and then you just have a confirmation there. So all other time frames are actually low. There are some people who actually normally go even to 15-minute time frame where you can actually even confirm, but unless if you just want to have a very nice sniper entry on this, if you are so much interested on that, but still 1 hour 15-minute time frame can just work. But most of the time I can use a 1 hour time frame for my entry. So that is basically what I can just use, because I know for a 15-hour time frame, sometimes it may be business sometimes, and they can just skip over my mind, and when I just come back, maybe it has changed the direction. So I be not more interested in just trending on 15-hour time frame. So most of the time I can just check minimum of 1 hour time frame, because I know that to actually work. And sometimes for fun, just to check how things are going, I can just go to 15-hour minute time frame to confirm what I got from 1 hour time frame. So between 1 hour and 15-minute time frame, I can use to confirm what I got from 4-hour time frame. Daily is where we saying we can just do analysis where things happens accurately. Weekly time frame is where we can see how the market has been performing for a long time. If you go to the monthly time frame, then that is basically if the currency has been here for a very long time and you want to see the full chart on one page, and that is when you can go to the monthly time frame. Otherwise, if you go to the 1 monthly time frame for the currencies maybe that has not been online for a long time, maybe you're going to be seeing just literal things on the chart, and that's all. So that's basically where you can test from fundamental analysis to the technical analysis, depending on you actually what you want. So it's basically lowering down your details. It's like where you start from biggest and then you go in details. Generally looking for the entry. You just don't enter from the above, because you can be correct on the above, but you are entering on the wrong side. You are entering at the incorrect time. So you are looking for the correct time, and so that you can time the market. So basically, when you are doing the top-down analysis, when you are doing analysis on the top-down analysis, it is helping you to come up with what we call the sniper entry. So basically that is what we have on the top-down analysis. If you love this video, make sure that you subscribe, follow me on all social media platform at DanTech. If you have any question, remember also to ask in the comment section. You can also click more to click the link that of the FX Spacer, that is a broker that I use, register, and you can get the bonus when you actually use my link. I'll see you in the next time. Bye bye.